Hershey has long been a big supporter of the U.S., being over in this market over 125 years. And we've been proud to manufacture our products in as close proximity as possible to where our consumers produce them. So we're pleased to announce that over the past year, we have invested $150 million in our U.S. supply chain, creating over 350 jobs. And that's really through partnership with our retailers, and also through the growth we've been able to drive on our core brands, which have been outpacing the category growth by 2x. So all of our investments have been behind those core brands.
Walmart is one of the big retailers that you're talking about. It's making a commitment to buy products that are made in America. What does that mean specifically for Hershey?
Yeah, it's a wonderful thing because Hershey and Walmart are two of America's most iconic brands, and we have had a long-standing relationship that is focused on driving mutual growth. So their commitment really helps to enable us. As they grow our business, we have the opportunity to invest more in U.S. manufacturing, and so it's really a common joint purpose that we have together.
Buying things that are made in America when it comes to chocolate, is that something you're seeing in the bottom line at this point, or is this something that with this retail commitment you're able to kind of build and hopefully draw that demand? Is this a chicken and egg scenario, and which is the chicken and which is the egg?
You know, I think consumers here in America love to buy products that are bought here, but I think what we're most proud of is the high quality that we're able to produce in this marketplace. At the West Hershey plant, for example, this is the largest, most technologically advanced chocolate making facility in North America. And we have over 1,100 highly skilled workers who really need 3 months to a year of training to be able to make these quality products. So Milton Hershey used to always say quality is the best form of advertising, and we're thrilled with the quality we can produce here in the U.S.
Michele, I realize you can't comment on earnings specifically because you report tomorrow. Obviously, you're still in that quiet period. But we've heard from a lot of people about how strong the consumer is today. Brian Cornell, the CEO of Target, told us all the way back in August, and then confirmed that again this week, that this is the strongest consumer environment he's ever seen. What do you see just in terms of how willing consumers are to drop money?
So we feel good about where the consumer is in the U.S. I think in a category like food, we don't see quite as many peaks and valleys because people need to consume food on an ongoing basis. But though I can't talk a lot prior to tomorrow, what I will say is I am so thrilled with the progress that we are making at Hershey on our strategic agenda. In the past several months and through the year, we've seen sequential improvement in our retail takeaway behind a very strong Halloween season. We feel really good about our acquisitions to meet additional consumer snacking occasions with Skinny Pop, which is growing very strongly this year, and the addition of Pirate's Booty to our portfolio. We're thrilled with what we've been able to do to drive profit in our international business, so good, profitable growth, and then also investing in key capabilities like our ERP system and digital commerce to drive the business.
Michele, I wonder more generally about your traditional brands, specifically in the chocolate and candy area. Obviously, other packaged food companies are experiencing this, perhaps a dilemma where younger consumers aren't really buying into the traditional brands as much. Is it different with chocolate? Is it different with those types of products as opposed to other packaged foods?
Yes, we're very fortunate that we have continued to see strong growth on our legacy iconic brands. Every piece of consumer research that's done rates our brands amongst millennials in the top 5. Recently, I think we were number 2 behind Google, for example, which we were thrilled to see. So while small emerging brands have captured share in many other categories, we certainly see that our large legacy iconic brands have continued to have growth and again are outpacing the category growth by double in the past 3 years. Now, where we have taken advantage of some of that opportunity is we have added some smaller emerging brands to our portfolio. Bark Thins, for example, or as we've expanded the portfolio across snacking with Skinny Pop and also Pirate's Booty.
Yeah. And you also are innovating. And this was not Skinny Pop, something that you left, but I took it home and it was, I'm going to describe it to you because you've got a winner here. It was like popcorn covered with chocolate. It also had some pretzels, and it also had some little peanut butter type things in it too. And I didn't have it for long, Michelle. I got to tell you that. I'm not sure it was Skinny Pop though, just from how
No,
how good
I don't think it was.
What was that?
So I'm thrilled to hear that. That was our Reese's and Hershey's, what we call popped snack mix. So what we've heard from consumers is they love our Hershey and Reese's brands, and the opportunity in that product you're talking about to combine the confection with peanuts and pretzels and meet a whole different consumer snacking occasion that's more about satiation and obviously, based on what you've said, about great taste.
I didn't get satiated because I kept going back. I put it in the cupboard, and I just kept going back and back, and then it was gone. I mean, just talking about it, I feel like Homer. I'm like, I do.
Drooling.
Well, that's one of the great opportunities we are fortunate to have in a category like this with high household penetration and expandable consumption, which is what I think you're talking about.
Okay, that's one way of saying it.
Expanding something.
Yeah, right.
Michelle, let me ask you just about that input cost, because that's another area the market's watching so closely. Are prices starting to creep up? Things like dairy along those items. Has that been an issue for you?
So we manage a basket of commodities, various different things, dairy, cocoa, et cetera, our packaging that go into our commodities. And we just constantly try and be out in the market hedging. And our real goal here is to minimize the volatility that we see in input costs. When one is up, the other may be down. But this is something that we have dealt with consistently over the years, and I don't see a particularly different trend in that area, other than freight and packaging, which has been a troublesome area, I think, for everyone in the industry.